It's a scary number. How vacant is your property going to be if you're a landlord? What does it mean to tenants out there in the marketplace? Stay tuned. We'll talk about it right now.
Good morning, everyone. Welcome to Morning Minutes. Myself, Michael BURGIO, Mark, Novak, episode 563. Vacancy rate, great sign for investors. Maybe not the best for tenants coming into the later quarter of this year, especially in Sydney. They've dropped from mid 4% to 200%. Mark, tell us about what type of impact that does. What does the figure mean when you see a post vacancy rates fall? What's vacancy?
It's good news for landlords. So vacancy is basically from probably the strongest information that you can get out there is from when landlords out there have to lodge their bond, and they lodge their bond when a new tenant comes in, and they actually give back the bond from when the old tenant moves out. That gap from an old tenant moving out to a new tenant moving in is your vacancy. So generally, it used to be accepted that around 5% was, your property was vacant, which would be around a week a year, or even probably, about a week a year, 2 weeks a year, whatever that is. And that's how long your property would be vacant in the course of a year. But it's changing.
Yeah, I'll bring up this later. Where is it? Here we go. It came out. So as you said, Mark, towards the end of last year, October, we were in inner Sydney, 5.5%, 5.5 for the middle. Our outer Sydney a lot lower at 2.1%. So it went from 4%, mid fours, and recently over the last couple of months, it's halved. And there've been tough times. May to July, August with lockdown. So a lot of people staying in the properties, renting a lot quicker. Look at Newcastle, Hunter Valley, 1% and 1.2%. It's almost like, I don't think it's spoken about enough, because one of the biggest concerns investors have is vacancy, renting out the property. And from the agent's point of view, especially being on the front lines, it's probably the least concerning. Like, it's such a rental market is so resilient for probably the past decade, but specifically the last 5 years in most parts of Sydney, especially northern beaches. We haven't seen a huge increase in rent, but what we have seen is continuous good stock levels, quick rentals, like from 1 to 3 weeks consistently. And remember, Mike, that vacancy doesn't always mean no money coming in, because a good agent will start a couple of weeks prior to it being empty. So it can be minimized quite a lot.
Interesting is we may find that people are leaving the rental market. We may find there's landlords that are actually just cashing out because it's just they are making so much money because capital growth has gone up through the roof that they're going, you know what, now's my time. I thought about it the last 3 years or 5 years or whatever it's been. Now it's time for me to actually sell that property at a record high. Some suburb growth has just been so incredible that landlords have just thought, you know what, I can hold on to this thing for another 5 years and that's not going to make this much money. Sell, and that's another rental property that leaves the market. If another rental property leaves the market, the existing pool of rental properties, it makes them a little bit more sought after. Less vacancy, greater rent.
Yeah, and there's been such a big push to getting people to buy a property, like the amount of first home buyer incentives. G'day, Luke. The amount of first home buyer incentives is insane. The interest rates people are being offering, because a lot of people may look at basically rent, especially like say DY units where there's nearly 9,000, so you get a really good cross section. The last 5 years it stayed almost even, but over the last 5 years or 8 years, interest rates gone from 5-6% down to 1.5%. So you're making your gap there. But you're right. There's a lot. There's probably I'm trying to think if I've seen that stat. I have renters. If it's gone up, just give me 2 seconds. Homeowners and rentals. you want to add something to that, Mark, while I look for this image, just with some numbers?
What does it mean is the big one. I think it means different things for different people. If you are a landlord, the next couple of years, if this trend continues like it actually is, if the trend continues like it is, there's going to be less and less rental properties in the marketplace. Your rent is going to go up pretty hard. And I think when you look at the information of what a typical landlord's rent has done, a typical landlord's rent has probably changed by, if the median was say 450 10 years ago, they're probably about 550 now. So a landlord's rent, property prices for a landlord has doubled for his value of his unit, for example, or her unit, but the rents have only gone from 450 a week to 550 a week. I reckon you're going to see that really accelerated for a landlord. Now, unfortunately, that's not the best news for a tenant. So, professional tenants, if you can get into the rental market now, lock in a longer lease, better.
Yeah, the hope for rentals is there's a pretty big surge in DA approvals, new construction. I know we touched on builders and developers I think on Saturday or Thursday, about sometimes the bad stigma. But this is where it comes into, because I was looking at the stats. Home ownership's percentage increases really, well, it's a decrease in 20 years, but an increase in the last 10. Renters is up, but it's really our population that's had the biggest surge. So that's where vacancies are going to sit quite low. And unless there's a big surge, not a big surge, a consistent surge in new developments, new buildings, I think vacancies will get a lot lower, and we will see a rental increase, which we haven't necessarily seen as significant as the capital growth. So many different moving parts, but I think it's more to point, it does point to a good, healthy property market on that side, on that rental side.
But do you know, I know prices are going bananas, but it is, I don't think, and this is very unspoken about, but I don't think it's easy for a landlord to borrow money. What I mean by that, an investor wanting to buy an investment property, I don't think it's necessarily an easy process to do in the last year or two, particularly with when there was all that banking investigations from the banks being investigated and stuff like that. So they sort of gave the landlord a punch on the chin when they made them pay 0.5% more in interest rates, which has historically never been done in Australia. So it sort of defavoured the landlord as an investor over an owner-occupier. And I think that's starting to have its effects now on the marketplace.
Yeah, like the ways the serviceability was calculated, the way the banks looked at the rental income basically was vanished. Like up until the Royal Commission, they would look at the income of the property, but they do it for I'm pretty sure they do it for homeowners. If you're currently paying rent, they'll factor that in. But yeah, if it's an investment, they want to see your income, service that. I'm pretty sure it's still the same. I know a lot of people have that feedback, so it's very different for investors.
I think financially for an investor, I think you've copped it from a lot of angles. The big benefit has been the value of the property has grown, but it's come at a cost. There's less investors in the market now.
Well, yeah,
there's less. Yeah, stamp duty.
Yeah, like available rentals is about 500 on the northern beaches, and let's say a couple of years ago we were always around 7 to 850. So back then, 2019, 890, 1,000. So that's a big drop. Let's take it from where we were talking in 2019, 2018. We used to sit on 900 to 1,000 rental properties. As of today, we're at 520, and we've been as low as 400, 500. So it's half the amount of investment properties out there. So it makes a big difference.
And the way a landlord is assessed, I think a lot of landlords are going for a loan because they've simply got the equity. but I think where they're actually falling or failing is on the income test, because to own that second or third property or even first property as a landlord, as an investment, you've got to be earning really, really good coin. So this is my prediction. I reckon there's going to be a chronic shortage of investment properties in the marketplace. They're going to be too expensive to buy for landlords because of the capital growth that's been running. Land tax is going to be too much, because that's just gone crazy. And don't forget, land tax is going to be assessed off these prices that we're getting. So land tax, guys and girls, is just about to go up. If you think you're paying a lot of land tax as an investor now and a landlord now, get ready, because you get ready for that to double over the next couple of years. So, and then you've got the extra 0.5% that a landlord has to pay in interest rate, because it's a landlord, it's an investor loan, not an owner-occupier loan. It's a pretty shitty landscape for a landlord, apart from capital growth, if you're not already in. But to encourage new landlords who are not already in, there's a lot of really bad numbers out there that they're going to have to get through. And I reckon you could see a lot of landlords not coming into the market or even leaving the market. I think you could see a stress on affordability, and it all ties back to this vacancy that we're talking about today.
Yeah, so it's a really important figure to watch. But anything else you want to add on to that, or I think we sort of covered it?
I just think be careful. Like, if you're a landlord and you can afford to keep a hold of your rental property, it's probably a good idea, because to get back in, I don't think you realise how hard it's going to be to get back in to buy another investment property if you choose to enter the market in 3, 5, or 7 or 10 years later. Like, landlords don't realise how much easier it was to obtain a loan 10 or 20 years ago compared to today. So if you've got that property, hold on to it. The good news is the vacancy is starting really to thin out, which means you're going to start getting some love in rents, which as a landlord you haven't seen for a very long time, rental increases. So the message from today is hold tight.
Well, especially when I think owners may look at sometimes, it's a bit hard to rent, the rent hasn't gone up, let's just sell it. And they quickly forget the selling costs, especially if they're changing the type of property and you're going to be buying something else. Like, if you're spending $1 million apartment, you commission 2%, 20 grand, marketing 30, exit like 40 grand. So you could spend 40 grand on exiting that property, which could break even. You almost could have the property empty for a year, or half, depending on your loan size. You could have the property empty and be better off holding the asset. So I think people just need to just see is it really that bad if you didn't get a rental increase?
And also landlords, but some of these guys have owned a property for 10 or 20 years. They've retired. They've worked really hard to pay the asset off. The last 10 years, they're actually beaten up more than they were sort of pepped up or looked after. If you consider rents have maybe changed in our region 10 or 20% in 10 years, the cost base of being a landlord has changed a lot more than that. I've disregarded interest rates on that, because this particular example I'm giving, the guy's paid it off. But if you look at what your strata, water, council levies have done, and what your land tax potentially has done if you're due and payable, it's a pretty tough landscape.
Yeah, whereas as exactly what you said, 10 years, 440. DYs are really good metrics to look at. 440 rents to 560 in the past 10 years. I just feel like as Luke said, the low stock levels, we could see a big rental surge in the next 3 years, really, 4 years, where you could see a 10% increase across the board. So wait it out. That's a wrap. Thank you.
Happy
everyone.
days. Hopefully that helped everybody out there. If you've got any questions, always shoot us a message.
So I'll get quick on the trigger. Shoot us a message. Thank you.